Good evening. This is Ifan from the Black Room, and I just wanted to go over a discussion that mimics a discussion that we had in the Black Room last week, talking a little bit about trailing too tight and just common occurrences, even the kind of psychological comfort of going to break even, feeling like, well, now I have nothing to risk on this trade, and I can only stand to gain from the trade. But just wanted to bring in a couple examples and show what a lot of times it can cost you, just really the opportunity cost of trailing to break even. And we'll talk a little bit about why consistently doing that doesn't make sense. And we can talk a little bit about when it might be appropriate to trail to break even. Okay, so first I wanted to go over the PTEN. Okay, this was a trade from a couple weeks back, and this trade stopped out. Trade did not work. Okay, so we'll take a look at it, and I just want you to get an idea of kind of what the setup looked like here. And I just want to outline the entry and the stop so that you can see here, right, we got a trigger here. I like the weakness on the daily, was breaking down on the daily, moved quite a bit in the morning, but I thought we had a nice retracement here, and I wanted to see it follow through lower. Okay, we got an entry in here, and was there an opportunity to trail to break even? Yeah, there was. You could have trailed to break even and you wouldn't have taken a stop. My stop here was 1605. The target was about 2 Rs. Okay, 215.75. So I was looking for a 2 hour trade, just didn't work, and we took a full loss. Okay, and that is just part of trading. You're going to have trades that don't work, and I previously recorded a video today about just why putting a time frame, putting a stop, which are both necessary, can make trading harder, because I can't say on this day P10 lower and then come back 2 days later and say, well, see, when it's at the lows here, and say, see, I told you so when it's at 1460. Right? I'm a day trader. I'm calling out the trade, an entry, an exit, and a target, and I use this percentage, 99%. Let's just to say maybe you have the utmost conviction is going lower. But as you put in the stop, as you put in these target prices, you can see how, if we're talking about the statistical probability of it working, each of those is going to reduce it, right? The chance that it works. You put in the time frame, you put in the stop, you put in the entry. All those, if one of those conditions are not met, then your trade will not be a winner, right? Or at least it won't get to target. I guess it's possible. Could go sideways until the end of the day, and then you take some maybe small gain, right? But for the most part, we need all those conditions to be met, right? In order for it to work. Not take out the stop, get to target, and do it within the day. Okay. So what a lot of times happens is, as soon as we get triggered into a play, it starts to not work. We want to just find a way to get break even, to avoid a loss. Okay, and sometimes. For me, it's about half the time, actually. Half the time, if I had maybe trailed tight, I could have saved some on it. Maybe we got this little bit of a bottoming tail that got rejected, and I say, well, that bottoming tail is not a bearish sign, so this could reverse on me. Okay, and I could get stopped out. Okay, and in this case, I said, you know what, I'm sitting tight with it. This is the stop that I use. I'm willing to let it stop me out. Okay, so it becomes 1 R. We lose an R on that one. Okay, now let's take a look at the trip, which was not an easy ride last week. This was also an official call. I'll bring you the numbers here. It was off of the 1 minute. You can see we have kind of a similar setup here on the TRIP, right? Move lower, we get a retracement, and it bases. And then we get some consolidation after the retracement, and I want to play it lower. Okay, so here was the call on the trip. All right, so I'm sure you don't need to see the call on the P10. Didn't work. I'm not trying to brag too much about a losing trade there, right? So that was the setup on the trip. All right, 49.80, and I'll have it here drawn on the chart as well. 49.80 by 50.50. Okay, and we get it to trigger, and immediately comes up, gets close to our stop, but doesn't take it out. Now it starts to go lower. Okay, and I think some people in the room that followed this trade decided, well, I'm just going to take it here. That's good enough. you know, but that's not what I'm looking for, right? Target, as you see there, is low of the day, and low of the day here is 48.70. All right, we only got to about 49.15. So what happens is, I think, and I've heard this from traders, even successful ones, who after it goes an R, which that's about how much this moved, right? A little bit short of an R. After it goes an R, they say, I want to go break even, right? After it goes an R, I go break even. But for me, if this is resistance, right? This resistance, I believe, should hold. That's why I picked the stop in the first place. I don't want to go break even, right? Otherwise, why did I pick this as my stop? Why did this should be hold? Now, there'll be plenty of times, as you just saw in the P10, they don't hold. All right, the timing is wrong. It's already bottom, whatever the case may be. But especially in this case of the TRIP, market was in an uptrend. This was staying weak. So I have conviction in this. I firmly believe that this is going lower. Have my stop, my entry, and my target. Right now, you can tell from the chart. Eventually, we got there, but it didn't look good. Did not look good, especially right here. Right, we got that huge green bar, and then finally we sit through it. We get to a target here. All right, about 2 R's on that piece there. Okay, we take to a target 1. We trail some, so we take half there, and then on the next new low, we take another quarter. And you see that the last piece, I go to break even. That's when, for me personally, that's when it's okay to go break even. On this, I typically go bar by bar, hourly bar by bar. We didn't really have an hourly bar that gave us good trail there. It was still a pretty big hourly bar when it was making new lows. Okay, right here, it's making new lows. We took another piece, right here. I was on the mic and just was gonna said I was gonna bid for it down there. Right, so that's why I got at 48.60. Okay, but see how often this break entry price got tested? Now what happens a lot of times too, right, is as we know in theory, right, in our technical analysis, the break of support should serve as resistance. Okay, now of course we got a deep retracement. You can just see the way that the trip, right, is a little bit wild. It's moving back and forth. Of course this is a 1 minute chart, so you'll get more volatility on this as well. Okay, and then when there's a second break here, as it came in, got close to stopping out, second, and then look at this break-even price. How many times, say you got back in it here, say you got out and you're okay with trailing break-even, but you want to play it again. If you go break-even again, look, you're going to get out again right in here, and then miss the next move. Right, so a lot of times too, you'll get that entry, you get a little bit of movement, and then it starts to move against you. A lot of times it goes right to that break-even, because that's the place that previously was support and now it's resistance. Okay, so then you get almost trail out right before the move goes. It's going to happen a lot. So I try to avoid the break-even trail until I'm basically at a runner position, right? Something like the last quarter. Okay, depending on how many targets are ahead of it. Okay, so a lot of times it's really tempting to go break even too early. I see it happen all the time, or even just an overreaction to a green bar. Okay, and so here's just a couple things to think about when you're tempted to go break even, because I think it's just something that's natural in us to want to be able to be protective, right? I think we all want to manage risk and keep our losses small, or just avoid losses. That's common too. Is that if you watch the last video where we talk about how probability is affected by each of these conditions, entry, stop, when you put in a new condition, when this is, and you say after 1R, I'm going to trail to break even, that's reducing the odds, again, that this is going to be a winner, right? Now you'll end up maybe break even or small loss, but that's one more restriction, right? So even if we say 100%, 99%, whatever, 90%, you think the strip is going lower, every time, well, now you put in this thing, well, it can't take out 50-50 first before going lower. It has to go at least to the low of the day, right? It has to do it within today. Each of those things reduces the chance for success. Just like I showed on that P10, I can't come back days later and say, see, I told you it was lower, right? That doesn't make any money, and that doesn't benefit anybody, right? Maybe, I guess if you're trying to turn it into a swing trade, everything called in the black room is meant to be a day trade, okay? So we're not holding any overnight exposure, okay? So by going to trailing too tight or trailing too often, you're reducing the chance that you get to your target. Now if it does get to target and you're already at multiple targets, all right, okay, then fine. We can go to break even and we're at a runner. We just want to capture whatever we can on that last piece if it decides to continue, right? Maybe it's an all-day trend, but for the most part, in this example too, on the trip, when we got this last quarter and we trailed that last quarter to break even, this was already more than made up for the P10. Okay, so we want to reserve that break-even trail for the runner. Typically on the runner, I do hourly bar by bar. In this case, we didn't have the hourly bar formed yet, so I said just go to break-even. Okay. All right, so the second point I want to make about the break-even trail is that the reason that you can track it over a month and almost consistently the break-even trail will end up costing you is that even if you're right most of the time or half the time with your break-even trail, the most that you can save on a break-even trail is 1 R, right? Because the worst case scenario, it stops out for an R. Okay, maybe in some other example, it stops out really bad and you would have got really bad slippage. In that case, maybe sometimes you save an R and a half. But more often than not, the most that you can save with a break-even trail is 1 R. But what's the most that you can miss out with a break-even trail, right? Technically on a short, the most that you can miss out is if it goes to 0 and then it's infinite on a long. That's not really what's going to happen most of the time, or almost ever. It's never happened to me. So it's never happened where I had a short and I trailed break-even and went to 0. It's never happened. Usually it's going to be something like 3 Rs, 4 Rs. That's more common for a nice winner. Okay, 3-4 times risk. Okay, so each one of those is going to make up for the other 3 times, 2 times that you trailed break even and saved yourself an R. So that trailing break even just has a higher max that you can miss out on, and a lot of times you're going to miss out on really good trades, really big trades, okay? Because the most that you can save is just 1 R. Okay, and then the last thing I want to kind of point out is about the break-even trail, is if you're consistently benefiting from a break-even trail, if the break-even trail is keeping you from having a really bad month, or week after week break-even trail kind of saved you, there's probably something else underlying your methodology or your strategy. It means that the trade wasn't going to work anyway. So if too often that the break-even trail is working to your benefit because the trade would have stopped out anyway, that means there's something wrong with the strategy. There may be something wrong with the entry, maybe the timing, right? Or maybe you're not paying as much attention to the market as you should and you're trading in a vacuum. I don't know what it is, but that just means it wasn't going to work anyway, and most of the time it was going to work. So if the break-even trail is really benefiting you, then there's really something else that needs to be addressed, and it's probably not the management, right? So those were just the few things I think should be considered. I know, for me personally, trailing tie is one of the biggest, or probably is the biggest thing that I wrestle with commonly, because I think it's common to want to be protective, always looking for the next one, scanning and thinking, okay, well, I just want to get this one protected, manage the risk over here, and then I can go on to the next trade, or I have a couple different trades going on or whatever, and maybe they're both not looking that great, so I'm thinking, oh, I don't want to have them both stop out or whatever, so try to find a way to trail. Okay, but it's not the right thing to do. I think a lot of times when we run into a situation where we're commonly trailing too tight, think about reducing your risk. It means you're not willing to accept a 1 R loss. It means you need to reduce your risk. Don't need to reduce to the point where you don't care. You need to be a little bit worried, a little bit stressed out by a stop out, right? That way we have something to play for. But that could be another thing you could look into if you can't help yourself, you're going to break even or some kind of trail too early, then maybe consider reducing your risk so you don't miss out on those bigger plays. Okay, so just wanted to kind of bring that up, show you one winner, show you one loser, and I think this is pretty consistent. I think if you commonly sabotage your winners with break-even trails, you probably know, and it probably really drives you up a wall. I think you probably already know. So I know that maybe just by identifying this, I'm not really helping anyone that is already working on it. But if you could just think about the things that I mentioned, maybe it'll help with your discipline a little bit and sticking with your management and sticking with your stop if that's what your management calls for, right? Is that you're reducing the chance that it works because you're adding one more condition and decreasing the probability of it. Number two, the most you can save is 1R, but the most you can miss out on is much greater. And third, if it becomes that the break even is constantly saving you money, then there's something else you need to be tweaking and fixing. Okay? Alright, so hopefully you found that helpful. These were both trades called in Black Room. As you can see, we will call ones that don't work. Well, maybe I shouldn't speak for the other ones. I know I will call ones that don't work sometimes. Alright, but for the, we have pretty good stats. Our stats are audited every year on the calls, and so when I give you these percentages, a 54% batting average, 1.9 sharp ratio, which I don't think is really all that outstanding. Those are all official calls from last year. Okay, we are doing an open house this week, and it will be going on through Friday. So hopefully you get to find a chance to come trade with us. It's earnings week. There's lots of trades going on. We had some nice trades today. I think it'll continue throughout the week. It's nice and busy. And then any clarifications you have or any questions you'd like to ask, we'd be happy to answer them. So hope to see you in the Black Room. Have a great evening.